Yes, everyone, I have a great video for you today, all right? If you're someone out there that's struggling in your day-to-day trading, you feel as if you are a failure, please watch the entire video, okay? Because I want to reach the masses of individuals that simply are struggling or having a hard time depicting how to trade correctly, what zones to look for, and simply eliminating setups that just do not make sense, okay? Because you got to, guys. Everyone who trades supply and demand, we are patient traders, okay? We are waiting. What we're doing is we're sizing up certain zones before the market even gets back to them. Once the market creates a supply or demand zone, we are looking to see if that zone possibly will hold, meaning is it a high probability trade setup or zone to trade from, okay? And then we wait patiently for the market to get to it. Now, the thing about it is there are certain criteria that fall into play or into place that you should be looking for. One of the biggest things I like to see is a void or gap resting back at the zone. I trade range-based charts. Supply and demand is universal, okay? So, if you are someone that's failing right now and you are on the verge of possibly wanting to quit today, all right, watch the entire video, guys. I'm going to show you, just simply using supply and demand, okay? This is for those that are struggling. If you're profitable and you're consistent right now, guys, there's no need for you to watch this video unless you just want to kind of hear me talk and maybe learn something that you probably didn't know. Not sure. But if you're already profitable, got a strategy that works for you, stick with it, okay? I tell everyone that whatever works for you, stay in place and continually be consistent, all right? So I'm going to jump over into my charts right now. But before I do, I just want to tell everyone this, okay? Do yourself the biggest favor. If you are a beginner trader right now, starting off and want to get into a new career, and this is what you're passionate about doing, this is the career field that you're looking at tapping into. When it comes to trading, as a beginner, always look at your higher time frame first. Allow that higher time frame to show you which way the market is trading or moving and trade in the same direction. Do not try to trade against, a moving train, okay? All right? Don't try to trade in the same direction as it. I take that back. Don't try to trade, if it's coming this way, you trying to trade against it. Don't do that, guys. Trade, move in the same direction. You don't want no head-on collisions, okay? We as retail traders, I say this time and time again, we do not put a dent in the markets, okay? It is the banks and the institutions, and the sooner and quicker you understand how smart money moves in the markets, you're going to understand that you need to ride their coattails. Grab all the crumbs you can get off the table and keep things moving. All right? That's all it is. Waiting patiently, okay? And just wait for things to unfold. If you can play any board game, all right, and you perfected that and you're good at doing it, it's the same thing. We're playing a game. We just got to be able to read these charts. And I'm going to show you just simply how to go about reading the charts using the higher time frame, scaling down or moving down to a lower time frame to look for setups. How I do it each and every day. And what changed my life is when I started to be able to understand market structure. I was passionate about trading, but when I understood how to read the markets correctly, that was game changing for me. From there, it was simply just devising a strategy that I could be profitable and consistent with and stick with that each and every day. Stop trying to follow everyone else's trading style, okay? If you got something that works, stick with it, all right? That's how people become successful, all right, guys? And then they take this, they make the money, become profitable, and they take it and tap into other things they want to get into. But you have to start from somewhere and stick with it. Don't jump here and jump there and jump here and jump there, because all you're doing is confusing, frustrating, and allowing yourself to become stressed out. Now, getting over to the charts, I'm going to show you my 60 range chart. Now, this is the NASDAQ 100 futures. I also trade the ES futures, the E-mini S&P. You can trade the micros. It doesn't matter. We have a wonderful trading community on our own Discord server, one that I created. over a year ago, okay? And we are growing by the day. We have great traders, a part of the community. So please come over. You can also invite yourself in for free and join us. Find that link down in the description portion of the video. So this is a 60 range, my higher time frame that I look for during my, daily intraday trading session, okay? What I'm looking at here is the market's been running higher. Yes, making higher highs and higher lows. We've got a high here, okay, at the top up there. All right, right here, around 50, 16,050. A low here, this is a leg, and the market is trading within this leg right now. All right, once the market breaks this area up here at 50 and above, we're going to have a major structure shift, or not structure shift, I should say major structure break above. Supply and demand, the way I trade, I'm always wanting to see a break of structure, okay? And there are other individuals or traders that trade, similar to, okay? It's what we're looking for. It's the key. To me, it's the cornerstone of the bread and butter to how I trade, okay? Now, some individuals may trade supply and demand, differently, but you got to put your own spin and twist on it, okay? All right? The reason why people always ask me why I trade range-based charts, because they just cleaner to the eye to me, all right? I'm going to say that again, cleaner to the eye. I like the way they move. They provide multiple setups throughout the session. Sometimes you don't get but one trade a day if you're trading time-based charts, okay? You may not even get that during the day, okay? You may have to wait more patiently. I like trading and using range-based charts because there's more price activity, and the fact is I can capitalize on more trades, okay? Or at least a few entries a day, okay? I mean, there's always a few entries on setups on the NASDAQ, okay? The ES, things a little bit different right now. We're getting, like I said, towards the we are into the fourth quarter of the year, getting ready to close out. This is the time of the year because of the holiday season and things like that. Volume kind of slows down. The ES is already a thick market. It trades lots of contracts on the daily. So, and the setups are far few in between. So you have to be very strategic and very patient in looking for setups, all right? You may not find a great setup every single day on the ES. Typically, the first quarter, second quarter into the year are great opportunities on the ES futures. But when we're shifting from that third quarter to fourth quarter, people are really stepping back a little bit. They're being a little bit more cautious about trading. And, they made their money, okay? They don't want to, hey, I'm going to take the next few months off, 1 or 2 months off of the year. That's kind of what most people who are become very profitable at trading do, because they've got the money. They made the money for the year. Why not go ahead and enjoy the rest and close out the year and enjoy the holidays with your family or vacation, or do what you're going to do, during the holiday season. All right, getting back to what I was talking about. So the market is making this high, okay? Makes a low here. We're in between this leg right here. It's moving sideways. Can you trade in a range? Yes, you can. But I do not recommend it for beginner traders if you're new, okay? Now, again, if you're someone that's really looking to change, have a life-changing event and get into a new career, this is for you because this strategy works time and time again. There are individuals who are part of our Discord community that trade very similar to, that spent the time watching the videos. They'll tell you if you come onto the Discord, watch the videos, you can educate yourself right here on this channel and become a successful trader using this simple strategy, okay? Because all we're looking for is to take pullback entries to supply or demand zones, but you got to look for the high probability setups. I know I'm talking, guys, but I'm trying to explain as well to get it through people's mind and their head so it sticks with them. Now, what I see here, yes, the market's been making lower lows and lower highs, breaking structure to the left-hand side, okay? Remember, I'm looking for a break of structures above if I'm looking to go long. Now, the market did on the higher time frame start to shift direction, okay? It started making lower lows and lower highs, breaking structure to the downside. So I would, my mind would shift from looking for longs to shorts, right? But the moment we start breaking structure back to the upside, and then I start seeing where it's taking out structure right here, and we're making higher highs and higher lows, then I'm interested again to start looking for longs. Again, be mindful because we are in a primarily in a wedge here within this leg right here. And what most people would do, especially those that I talk to and I express even on here on the videos, wait for the major structure breaks, okay? That's going to be your best opportunity, and then the pullbacks. If you're someone that's struggling with definitely trying to trade within a range or when the market's in the middle or something, again, I always say please do not try to trade in the middle of anything, especially in the middle of a leg. Look to, sell the highs and buy the lows, okay? In this case here, we are in this leg here, so I would wait again for 16,050 to be broken for a pullback to go higher, to go long, okay, to look for a setup at a demand zone. So for instance, if we broke 1650 here, I would be looking for a pullback to, let's see, but this is on the higher time frame. But if I was to mark a zone, once we get the structural break here at 1650, I would be looking for maybe a pullback, probably this area here, down here, which would make sense, and down here, okay? Now, this would be basically the 50% area right here of this move if we broke the structure to the upside. So the lower that you can actually buy, because you should always be looking to buy at discounts, meaning buying the lows and selling at premiums, selling the highs, this would be a golden opportunity back down here. But sometimes the market will just come back to this, say, for instance, this area right here, reject it, and then move higher. So even when you see rejections at a zone, it's a solid demand zone. In this case here, demand is aggressive buying. This here was aggressive buying, and the market pulls back to this area, then look to go long if you get the clear rejection. So you probably want to see something like this. I'm just going to show you right quick. The market breaks through this area right here, breaks the major area structure. It breaks it by pushing higher, retraces back to the zone right here, demand. Okay, lots of buying right there. You get the rejection in this area, you're going to be looking to go long. Okay, and even down here, if the market comes back, even retraces back even lower. Okay, so be mindful. Okay, so right now I'm looking to say, okay, the market is making higher highs and higher lows. We're breaking structure here to the left hand side of the chart right here. Okay, as it's breaking through or trying to attempt to break higher. Okay, so I'm bullish. Okay, I'm still keeping in mind that we could still, move lower, which means that we got a low here. This could be a major retracement just to push lower to make a lower low. But right now, I'm going with the ebbs and flows, and we're making higher highs and higher lows. Now, I'm going to go over to the lower time frame chart and just show you a few setups. I posted I think one or two trades I took today on the NASDAQ over on our Discord community, and that's what we do. As traders, we share our trades, the entries that we take. And there's a channel on the Discord server titled Trading Floor. You can come over and join us if you're already trading, and you want to share your trade entries. Come over, post your entries, okay? All right, it's our way of being able to express and show to other traders the trades that we're taking, and maybe individuals who are learning would want to ask questions. It helps to see other people's trades, all right? Because you can ask questions, all right? So let's go down to the lower time frame right quick, all right? I'm on my 12 range chart. I trade range-based charts. Again, this is what I would trade and looking for lower time frame entries, okay? So what I noticed was the market was moving higher, okay, up here, right? All right. Now, what I like to see, if the market is moving higher and I'm looking to go long, again, I'm looking for pullbacks to key areas of demand, okay? So the market's making higher highs and higher lows. We already saw that on the higher time frame chart. We get a breaker structure right here above 982.5. This was the break happened around 950, 952, somewhere around there. And as long as the market is continuously making higher or new highs on the higher time frame, then we're looking to just look for setups, demand setups on the lower time frame. Again, breaker structures, you want to look for that. That's part of the strategy I use. I've got tons of videos on the channel, guys, where I go into detail about every aspect of the actual strategy. But this is a kind of a rundown to give you a synopsis of how easy it is to trade this strategy. So we get a breaker structure, just like I showed you on the lower time frame. The higher time frame. Breaker structures, looking for pullbacks. We're using the same principle, the concept, just on the lower time frame chart. Because if we're already moving higher on the higher time frame, then just look for the breaker structures to occur on the lower time frame, the pullbacks, retracements to demand zones, and just take your shots going long. Okay. So we get the break above here, meaning a break above 82.5. Okay. This is a demand zone. Why? I'm gonna draw it out for you right quick so you can just see it. You see where the market ran up high here, made a high, higher low, boom, broke up here, made a new high. We cleared this area here. That's a break above structure right there. This right here is a swing, okay? This is a little swing where we have that 80 in this breaker structure right here. And this is the prior high that the market made. We got a retracement to the zone, rejects it, and then we're looking for a long. Now, what do you look for when it comes to rejection? Well, it depends. Normally I like to see a break of a candle close, above the last bearish down candle. But you can also, identify strong momentum that's occurring at a zone if you pay close attention to the candle. Sorry, guys. right here, it taps into the zone, okay? That's a bullish candle there to the upside. But typically what I like to see, it is a bullish candle there to the upside. But we didn't get a clear break above. Okay, the last down bearish candle there. It pulls a little lower into the zone. At this case here, I talk about when the market pulls a little deeper into the zone, you have to look for a little bit more clarity, a little bit more confirmation, okay? And in this case here, we got a turnaround here, a bullish candle to the upside, all right? And then you get another candle that closes above. We get the clear break of the last red down candle or bearish candle, go long. Those are the type things. If you see a strong bullish candle, like to the upside with like a hammer candle, where basically once the market taps into the zone and quickly moves away, you get a wick of a candle and a close of a strong bullish candle showing lots of momentum to the upside. That could be a real strong indication right off the bat that you can get to the trade and possibly not wait for the break or the candle in the opposite direction, or the close of the candle in the opposite direction. But what typically I like to do is look for that. If you're more a conservative style trader, I would definitely recommend waiting for that full close of that candle above that last bearish down candle, okay? That's going to give you more indication. But even if you got in here, let's say you got in here, right here at the close of this candle here at 84, it runs back up here to 93. You pick yourself up, what is that, 84? That's 9 points right there. 9 points, back up to 83. Excuse me, 93. So that's a beautiful trade right there on the NASDAQ. And you can do that time and time again on the range chart. You just got to wait patiently for it because there's so much movement or activity that takes place when we're looking at range-based charts. And I'm not knocking any, chart style or time frame or tick-based or volume-based chart. It's just that sometimes if you're looking for trying to trade a time-based chart, let's say you trade a 5-minute chart, you may not see multiple setups throughout the day. Now, when those type trades do kick off, say on a time-based chart, I've seen it with my own eyes. I don't trade them, but you may get one nice setup. You may possibly get two. It just depends on how the market's really moving. But on range-based charts, you'll see a lot more scalping opportunities to take trades from. So look for those setups. It's simple. Just follow the direction of the higher time frame. If it is bearish, meaning it's making making lower lows and lower highs on the higher time frame, then just move down to your lower time frame chart and look for, just as we did right here, look for structural breaks to the downside, retracement to the zone, supply, look for the rejection, and go short. Just as we did here with the NASDAQ 100, going long, looking for opportunities at areas of demand. This was a demand setup. Now, my trades that I took today were actually shorts, and they were, how do I explain this? What most would call possibly counter trend against the direction of the overall higher time frame, the market. But when you become more experienced and more seasoned, you're able to catch things when in terms of not always having to look at the higher time frame and simply be able to take scalps off the lower time frame charts. But you got to understand and take a look at the higher time frame as well, just to know that you're not bumping up against any major area of supply or demand. I'm sorry, guys, any major area of support or resistance, because you don't want to be selling into support and buying buying into an area of resistance. Okay, so that's why the higher time frames, you need to keep your eye on that. But there are opportunities when the market is, kind of in between an area, even on a higher time frame chart, but it's showing structural breaks to the downside on the lower time frame. Like for instance, the market was making higher highs and higher lows, and then it started shifting, breaking this area structure here, breaking this area structure here. So I took a nice short. I posted this over on the Discord community today. The actual trade, posted it. It's there. And I took the trade from up to this area here, back down to here. This was the short opportunity right here. Pull back, broke structure. Look at all that loads of what? Aggressive selling. So when it comes to aggressive selling, we're talking about tapping in, retracing back to a supply area. This is supply. The market tapped into that, run it back down to the lows right here. This is going to be an area to get out. So you look for rejection here. If it shows any signs of strong momentum to the downside, okay, then get into the trade or look for the candle break, the close of the candle in opposite direction type break. Like right here, if you got in, let's say you got in here at 60 and you rolled it all the way back down here to 42, or maybe even 40. look, you picked yourself up a good 16, 17, 18 points right there, okay? Beautiful trade that you could have got yourself into very quickly, all right? And I think I was a little late on the trade that I took, and I ended up capitalizing somewhere between like 13 and a half points. It was somewhere around there that I picked up those points on. But I posted that trade over on the Discord as well. Actually, I took, if I'm not mistaken, it was 2 entries, 2 shorts in this area here. I got in somewhere in here, took the trade down to this area right here. I saw it pull back, and I saw that it still had opportunity to come down and test the lows down here, and I got in again. So I got in on 2 shorts just in this area right here. So I perfected this strategy and how I trade it. I use it in my own personal trading on the daily. There are individuals on the Discord community. Please, guys, if you're not a part of the Discord community, go ahead and click on the link down below or find it and invite yourself in free. But there are individuals just as well that have taken the time to watch the videos. Yes, it's a lot of videos, but they become educated through the videos. Because basically, the content is there. All you have to do is spend time watching it, and you can educate yourself. There's no need to pay for a training course or a trading course or a mentorship program. It's there, all right? Now, the only thing that I have that you may be interested in, and it's just a way to support the channel, my efforts as a video or content creator, and all the valuable information I'm putting out and sharing with you, is if you want to become an elite member, it's $6.99 a month. What do you receive? You receive the trade breakdowns where I go into detail on trades. It's basically as if you were sitting next to me and I'm giving you a rundown of my thought process and you're sitting there watching me trade, okay? As well as I got a video list of, or hand-selected video list that I put together of just great content-packed, valuable videos that I pulled, off the channel. I put them away and put them in a series, link by link, and it's only accessible to the elite members. But what it does is those are the videos that I find are the most pertinent, or the ones that have the most valuable information in there that I feel will help people along, kind of put them on a fast track pace versus having to go in and watch over 600 videos. I'm not going to tell you which videos to watch and all that other stuff. That's the reason why I created that selected hand list of videos and made them a part of the elite membership for $6.99 a month, okay? All right, so you have the choice of paying hundreds of dollars or thousands of dollars from somewhere else, or if you just want to support the efforts here as me as a content creator and giving you something as well, you can become an elite member. That link is down below too in the description portion of the video. So again, you got the Discord server link, that's free to join. You got the elite membership link there for $6.99 a month. If you choose to become one or not, that's up to you. But this video today was to show and explain to you how I trade on the personal, the trades I share with the community as well, and how this strategy works for me, and how I was able to transform myself to becoming a profitable and consistent trader on the daily, all right? So I appreciate everyone tuning in and watching the videos. I thank everyone who's currently subscribed to the channel. If you're not a sub to the channel, please take the time to go ahead and click on the sub button down below. Make sure to turn on all your post notifications, and last but not least, please drop a like on the video. I'll see everyone in the next video. Take care.